Thanks for the kind introduction, Mubashir. I'm very pleased to be here and share my experience as well as whatever little knowledge that I have in the blockchain space with you. Basically, when Mubashir had asked me on this presentation, sorry, so I thought maybe I should call this particular presentation as transforming both your professional as well as personal world. Uh, Basically, blockchain transforming both your professional as well as personal world. Professional more so because blockchain has a great impact on financial services. And we will look at that as we get into the presentation. And personal life, a lot is going to change because of automation. The world is becoming more connected. Devices are coming into picture, and it is interconnected devices that manage our life rather than we managing our life on our own. I'm not saying that we're becoming dependent, over-dependent on them, but they do command and do play an important role in managing one's own personal life. But before that, what is blockchain? Blockchain, incidentally, has got into a lot of hype as well as a lot of interest the world over, and it also features as one of the most searched key term or the keyword in Google when Google looks at various keywords at which are driving searches or driving the traffic on the internet, and blockchain happens to be one of that particular word. But what is blockchain? Blockchain, simply put, takes us from a centralized world to a decentralized world. What has happened is, over a period of time, when people started interacting with each other, they realized that there was a need for somebody to come in middle, and that particular person in the middle was to give the required trust. For example, if we go to a bank, I am borrowing somebody else's money. I'm a borrower, money is coming from a lender. I don't know the lender doesn't know the borrower, but the transaction is still happening because there's an intermediary in between. And the world has evolved like that over a period of time. And interestingly, what has happened was when we were in unconnected world, we needed these intermediaries because we didn't know where the other parties in an equation were located. So we needed somebody, an intermediary, who would connect with all these people and then facilitate exchange of information. More importantly, facilitate exchange of services. Even more important, facilitate exchange of services by bringing in trust. That is why the middle parties, we at one point of time we also call them as trusts. But with connectivity increasing in the world becoming increasingly online and connected, we are now talking about a trustless trust. So we don't need an institution in between to bring in that required trust. Basically, two connected devices can trust each other by using a particular protocol or by using a particular technology. We don't need an individual in between. And that's where, when world is now becoming, it's interesting. Earlier, when you go back to the old world, people traded with each other, maybe in the form of barter or maybe in the exchange of value, which was currency or something else which was valuable in that exchange. And then subsequently, the organizations came into existence. Now what's happening is, interestingly, people want to bypass those organizations and deal with one another. An interesting example is peer-to-peer lending. P2P lending that is coming up in a major way the world over, even in United States and even in UK, even in India, we have a company called FaceSend that deals with peer-to-peer lending. That's because they want to bypass an institution, they want to bypass a financial institution and enter into a contract directly. A, because it is cheaper. B, there is a technology that facilitates it. And C, it meets their required trust requirements. So that's what we call as fostering peer-to-peer collaboration across the globe and reinventing the way we live. But more than that, if you ask me, if you look at all our processes in your own world, if you look at stockbroking, if you look at registry or any other computer share registry or any related thing, you had processes which were designed for offline world. Then computers came into the picture. Then automation came into the picture. Then what has happened is we kind of force-fitted our processes to look at into the connected world. I'm not trying to say that we are running suboptimal processes, but that's how all the businesses have evolved over a period of time. But at that time, we didn't have a technology which was purely invented for the digital world. And now comes the technology which is blockchain, which is purely invented for the digital world. So you don't have to work around your processes or force fit your processes to meet the requirements of a digital world or a connected world. And if you look at the underlyings of blockchain is primarily built on TCP/IP protocol. If I get into the technical aspects, it's transfer connection protocol, internet protocol. It's the same protocol through which different computers talk to each other, and the messaging happens between individuals using the same particular protocol. So blockchain has been built on this protocol. And one more important thing is the example that I mentioned to you about a person lying in between. That particular person who was lying in between was consolidating information from all the people in the ecosystem. So all the information that was required is with that particular person, and the other people had no visibility as to what information it was. Let me give you an example. Today in money remittance, when a person in US remits money, the bank in United States sends that money using an intermediary in between, which is SWIFT. And using SWIFT, the money comes into a bank in India, and through the bank it gets disbursed. And SWIFT will keep a record of all the transactions that are happening. Technically, that is called as a ledger. A ledger is a entry or a book where you keep all these transactions. Now comes the technology, blockchain, and makes this ledger accessible to everybody. So in this example of SWIFT no more controls the information, and this ledger automatically is extended to everybody in the ecosystem, and in the ecosystem each one is called as a participant, or in technical terms it is called as a node, a computer node. And since these computer nodes are all connected and the information is shared with everyone, is there a need for an intermediary? There is no need for an intermediary, because you can exchange information very easily between each other. That's why, yeah.
My understanding is more to facilitate a transaction.
Correct.
Let's say Ganesh transfers to Ramesh.
Right.
Ganesh puts $5,000 to Ramesh.
Right.
Sitting in US.
Right.
Ganesh also has the ledger balance and ledger
Right.
details.
Right.
Same way Ramesh has.
Right.
And they're different banks.
Right.
SWIFT does not control the ledgers of those guys. They don't have access to information that Ganesh is holding so much.
No, in terms of what happens is when the information is transmitted on the network, that information is only with SWIFT. For example, if you...
5,000.
Yeah, exactly. Correct.
The fact that Ganesh has 500.
I'm referring to that information pertaining to the transfer piece. That's correct. Transactional information. That's correct. Thanks for that clarification. That's the transactional information which is more important, and SWIFT control. For example, you get a routing code, and if the money doesn't come, you go to the bank, give a routing code, the bank says, let us get back to SWIFT and understand where it is. And empirically it has been proven, if the money doesn't get transferred, SWIFT on an average takes about 3 to 4 days to resolve that particular case, because the money transfer goes through multiple hoops, and nobody participant in that particular transaction apart from SWIFT has access to that information. But with distributed ledger technology, that information is spread out to everyone. So there is no need. So intuitively, what comes to mind first is there is no need for reconciliation. Why do you do reconciliation? Because my information does not match with an other person's information. And when there is mismatch of information, then you get into what is called as reconciliation. But with a distributed ledger technology, it eliminates the need for reconciliation, and it makes the information transparent across the networks. As a result, it is called as the permissionless. You don't have to take a permission of anyone. Transparent and immutable. I'll explain that in a bit. Yeah. Sorry.
The last one, transparent and irrefutable.
And immutable. Immutable. I'll explain what it is. That's correct. So in terms of why, I'll tell you. First, as I said, disintermediation. I hope we are all on the same page because we don't require any intermediary. I'll give you more examples, especially from your world as well. Then increased capacity. Why increased capacity is when this distributed ledger, which is used, it is stored, as I said, on multiple nodes. That is computers participating in a transaction or in an ecosystem. When they are participating, the information is not stored on one computer. The information is distributed across the computers. So you're taking computing capacity of those multiple computers and you are sharing information, which is nothing but the same principle, underlying principle of a cloud storage, right? When you kind of distribute the computers all over the world, create a cloud through that particular computers and share information. That's why increased capacity. The better security, why it comes is, what happens is, if we look at blockchain, if we technically look at the words block and chain, that is what it is. So the blockchain, the computer algorithm which is responsible for creating a blockchain, for example, the first application, which was Bitcoin, most of us are aware. What happens is the code has been written in such a way that every 10 minutes a block gets created. And this block has information or value which people would want to go after. And when they identify the block and when they look at information or the transaction in the block, they validate, they get incentives for that. Technically, that concept is called as mining. And after 10 minutes, the new block gets created. And these two blocks are interlinked. That means the new block that is created has relation to the information that exists in the old block. As a result of which, it's just like a nuclear fission kind of a reaction. It kind of creates blocks after every 10 minutes and they are interlinked to each other. Now, if somebody wants to go back and change the information in that particular block, he has to go back and change the information in all the blocks that are interlinked to each other, which is technically impossible because you don't control all the transactions by yourself. It is like, as I said, it is like a large connected system where multiple computers are participating. You're validating a transaction, but you cannot go back and erase a transaction because it will impact all the previous transactions. Hence the word better security and hence the word immutability. Basically, they are immutable. And faster settlement, I'll go back to my example of Swift. There's a company in Philippines called coins.ph. So what coins.ph does, in United States, most of the migrant labor are Filipinos. They get a salary of about $400, $500, probably every 2 weeks. And their family is dependent on remitting that particular amount. And these guys, hitherto, what has happened is they used to go to established mainstream banks, and the cost of money remittance through the mainstream banks is about 8 to 9%. So they don't want to do that because it's expensive. They're remitting very smaller amounts, and then you're paying 9% of it, then the person who is receiving money does not get, he is getting only 91% of the money that has been transmitted. So what these guys used to do, they used to catch hold of people who used to visit Philippines, consolidate the money, give it to them. And then they used to be dependent on that. Now coins.ph comes and creates a money remittance network using Bitcoin protocol. And the way it happens is these migrants hand it over to a coins.ph agent in Philippines. He takes the money, let's say $400. Today, each Bitcoin is something like $2,800. So he converts that into the equivalent amount of Bitcoin and transfers to his counterparty in Philippines. And the transaction happens in, can you believe, less than a minute? Yeah. It happens in I know, technically I'm just, it happens in seconds, but for the beneficiary on the other side to get the money, it just takes them about less than a minute. Then the counterparty over there receives the Bitcoin, converts that into Philippines pesos, and hands over the money. And the cost of remittance is less than 2%. You're transmitting small value ticket money, and then you're transmitting them at a lightning speed, and you're giving a better service at a lower cost. So now what has happened? In this particular segment, in terms of whatever transfer earlier used to happen through the banks and SWIFT is evaporated, number one. Number two, we all know about M-Pesa in Africa. Today,
So, sorry, this coins.ph is just a platform to facilitate this.
that's correct. He's like a, I would say he's like a business services provider, money remittance service provider. Exactly. Who is,
Like the ones we had in India all over the place sometime back. What is that called? Western Union.
yeah, that's correct. That's correct. They still go through the normal channels. Correct, correct. Now coins.ph has become more popular, and in Africa, M-Pesa is no more popular now. It is BitPesa, because BitPesa is able to do it at a much faster route. I'm not saying there are no alternatives. If you go to Bangladesh, there's an alternative called Bcash. Some of you would have heard about it. I'm not saying there are no alternatives, but this technology kind of helps you completely reinvent your business model and look at a segment which earlier you didn't want to cater to, or you were not able to give a service at a much lower cost. So that is faster settlement.
Educate us a little bit on Bitcoin as well.
Sure, I'll do that. I'll certainly do that. Then the decentralized consensus, as I said, in terms of no single party controls the network. It is basically the computer nodes that control the network, and if I happen to be that one particular owner of that computer node, then I control the network. But they work out various algorithms, like you need to get to minimum of 51% consensus. That means 51% participating nodes in the network have to arrive at a consensus, then only a decision can happen, then only a major change can happen. Now they're taking it to 80%, 90%, and 95%. That's why it is decentralized consensus.
1 second.
Sure.
This transfer of money of this Philippines thing,
Right.
say $5,000 equivalent or $500 equivalent is getting transferred.
Right.
Let's say the guy on the US end is having a Citibank account,
Right.
and the guy in Philippines end is a HSBC account.
No, in this thing, the account doesn't matter. Even I don't need to have an account. I go to coins.ph branch or an agent in United States. I give the money to that particular person. Most of them are operating either.
Recognition of that person is done by some kind of a UPI type of stuff.
No, there is no, there is no, like US, there is no need for a recognition in terms, like KYC documents that India has, they don't have a need for such recognition. As but only one thing that you need to do is you need to comply with money laundering compliance. You have to be anti-money laundering. So they're registered under a equivalent of companies converting into Visual C or whatever it is, right, in whatever language it is, and it is storing those numbers in the binary codes within the computer. In a similar fashion, the way it happens is you have what is called as a public key and a private key. So the public key will tell you what information, but to gain access to the information, you would need a private key. So that's how it happens in a combination of a public key and a private key.
So we remove this recall process completely. But then what we are not directly looking at is the end person who is getting that remittance correctly or not. But in between
there's no intermediary.
There is
No intermediary. There's no intermediary.
100%
Exactly. The concept is similar. Today you are able to send mail to your cousin in US and he or she is receiving in fraction of a minute. So the same concept, because mail is also done on TCP IP or SMTP protocol. This is also using the same protocol. That's how they are able to apply money transfer functionality.
So someone needs to act as one service provider who will
Exactly.
build a global ledger.
Exactly.
And everyone has to
Exactly.
act as global
Exactly. We'll get into it. There are multiple methods of implementation. There's no mouse here, so how do sorry, I'll get off this. So as I said, it reduces time, it reduces cost, it reduces risk, and then it's an online process for an online connected world, as I mentioned to you, and it doesn't involve or doesn't ask for force fitting an offline business process for online business. I have some interesting videos, we can look into it, then it makes things a little more clear to you. So to your question, the genesis in Bitcoin, let's understand how Bitcoin came into existence. In the year 2008, we're talking with Rajiv about the mortgage crisis and all that stuff. In the year 2008, when the mortgage crisis happened, they kind of realized that there's so much of regulation and there is so much of government intervention that is leading to all these crises, and the way they devised the system. In US, your home can be owned by several thousand people who have not even invested in your home, because you kind of converted it into a loan, you convert it into a security, sell it in the stock exchange, and if I buy that security, technically I'm holding a piece of your home and you have no connection with them. And when this mortgage crisis happened, there's a person by name Satoshi Nakamoto came with this concept, because he kind of realized that all of this regulation is leading, the government intervention is leading into this inefficiency. So he wanted to introduce a completely deregulated peer-to-peer electronic cash system, wherein the money is generated by a computer program and it is not generated by a central bank, right? So Bitcoin is basically a money or a coin that has been created by a computer program, an algorithm. And it may sound weird that how can a computer program create money compared to a central bank? Today, the entire Bitcoin supply that is there in the marketplace is valued at $40 billion. $40 billion. So we're not talking about initial proof of concept or something which is happening on a fashion basis or something happening as a fad. It is $40 billion, and this guy was responsible for creating it. And why did he create it? Because he thought that if he provides a mechanism where people can trust each other without the dependency on the government, then people can start transacting between each other by bringing in some trusted element, and that trusted element is a code, or that trusted element is a computer. Sounds like a Hollywood fiction movie, but it is actually, that is exactly what has been implemented. And when he wrote this code in 2008, he wrote the code in C++. Basically, the Bitcoin functionality has been written in C++ using the protocol called as a blockchain. And when people started looking into it, a lot of technical companies started taking an interest. Today, you can buy content on Apple in iTunes using Bitcoins. You can buy Microsoft software using Bitcoins. You can, there are some organizations in Silicon Valley which have tied up with a company called BitPay, where the salary is no more given in dollars to employees in Silicon Valley. The salary is given in Bitcoins. And they're using Bitcoins, and there are ATMs where you can convert the Bitcoin into cash and cash into Bitcoin. So that is how the Bitcoin came into existence. But what has happened is, in terms of yes, you can. It does. It actually does away the requirement of central bank. Central bank. All the central banks know they don't, because they do the monetary policy, they do the currency issuance and all that stuff. Technically, Bitcoin I wouldn't use the term Bitcoin, but the blockchain and the currency written on blockchain can do away with Bitcoin. And in fact, I'll just complete this and then come back. So what has happened is, then some of you may know that there's something called as a dark net. And today in the world, the total, if you look at $100 of commerce, $97 of commerce happens on dark net. Only 3% of the commerce happens on a open regular net. So what happens in a dark net? Dark net, people buy ammunition, people buy drugs, people buy various other things which are generally forbidden by the government. And all the people who happen to operate in the dark net, they kind of realize that Bitcoin is the most easiest method by which they can use the transaction, because you can transfer from one end of the world to another end of the world. It's while there is transparency, it's equally opaque because there is no intermediary. Nobody knows how it has got transferred and stuff like that unless the service provider who is involved in it. And recently, some of you may have faced a problem with WannaCry, and when WannaCry hit, people said, give me Bitcoins, then I will kind of, exactly, we will release your computers from our grip. So because of all this forbidden activity and being used in the darknet and all that stuff, Bitcoin got a lot of bad press. But what has came into existence is blockchain, the underlying technology. That's why I kind of use this analogy. It's like an oyster which has kind of spawned a pearl, but that pearl got tarnished. It doesn't mean that oyster cannot produce more pearls. The oyster can produce more pearls. And that's how lots of people now, they moved away from Bitcoin as a currency application of blockchain into other applications of blockchain. I will touch upon those applications as we go along. But before that, it's important to understand, just like a cloud, where you have a public cloud and a private cloud, Bitcoin also, there are two components. You have a public, blockchain also has two components. You have a public blockchain and a private blockchain. So which are the public blockchains? They are Bitcoin and Ethereum. Ethereum is another currency that came into existence. This sounds like another science fiction movie. There's a 19-year-old Russian by name Vitalik Buterin. This guy's family migrated to Canada. He is a gifted child. I had the privilege of meeting him 2 months ago in Delhi and spending good amount of time with that guy. So this guy, when they moved to Canada, he started solving class 10th mathematical problems when he was in class 2. Then the teachers kind of realized that this guy is a very gifted guy. They told the parents, saying that we cannot train him, take him out. So he went out of school. He didn't want to go to college, and somebody told him about Bitcoins. He started studying about Bitcoins. Then he understood that Bitcoin has a lot of inefficiencies. He kind of corrected that Bitcoin inefficiency. And the beauty of this is, today if you want to go and create a Bitcoin, go to GitHub, GitHub, you get the source code of Bitcoin. It's all done on an open source code, because these guys they don't come from the world of crony capitalism, wherein they want to take an idea, patent the idea, create the money, and control the world. They're not of that mindset. They want to come up with ideas which everybody can adopt, and which basically helps world to become a better place. These are very gifted coders, very gifted computer programmers who want to change the world for the better and use computers to drive that particular change. So this guy came and then he wrote a program on blockchain, created an alternate currency called Ethereum. Ethereum today, can you take a guess how much it is worth? It is worth $30 billion. Vitalik Buterin and another guy who founded a company called Consensus in Brooklyn, they both of them kind of promoted Ethereum. Now Ethereum has become very popular. So Bitcoin and Ethereum, like that there are multiple currencies, I will get into that. So these are the public blockchains. Anybody in the world can participate in this blockchain if they have access to that particular network. How do you get access? Through a computer. You need to have a computer, computing power, and energy to run your computers. And if you know the code, you can participate in the blockchain. You can earn money also. You can validate the transactions and earn money. You needn't buy bitcoins. Today, you can validate those transactions. They're technically called as mining. And in a country like Iceland, where they have kind of realized that they cannot create jobs, the government has set up Bitcoin mining pools in Iceland, where the Icelanders are going to those mining pools on a daily basis and earning their money using those mining pools. So these are the public ones. Then comes the private one. Remember the arguments, no disregard to the CIOs in the room, but these CIOs used to say the public cloud is not good for organizational security. Let's do a private cloud. But the same CIO is using Instagram, Facebook, and LinkedIn, which happens to be on a public cloud. But in an organizational context, from a security perspective, they didn't want to promote a public cloud. They kind of implemented a private cloud. The concept is similar. So as a blockchain, I don't want rogue computers to come into the network and spoil my blockchain network. So what do? I implement a private kind of a blockchain, and there are protocols in a private blockchain. The most popular ones are Ripple, Monax, and Hyperledger. This is being promoted by IBM. It's written on a Linux platform, and they are promoting this. So this is important to understand, and for some of the techies in the room, it's all written in C++. C++ was invented in 1980s, right? And C was invented even before that. So we are not using something which has come out of ether and then trying to create a blockchain. So what these guys have done, remember the name Satoshi Nakamoto I said? A lot of people are trying to identify who that particular person is. But there is some research, some kind of empirical evidence which says that these are group of computer programmers located in different parts of the world who were motivated by an ideology and came together under the pseudonym Satoshi Nakamoto and started developing blockchain using C, C++, Java, Solidity, Python, all these languages. There's nothing new language out here. It's all from existing languages. So what did they do? They put together TCP IP. They put together what we call as the crypto computer programs, which is called as the hash algorithm, secured hash algorithm. And then crypto signatures came into account in 1960s. There's a guy called Paul Barron who invented crypto signatures. They studied the entire universe of this computer programming, took the good aspects and put it together to match their ideology. So that's how blockchain has come into existence. Now comes the fun aspect. How will it change your professional world? So I picked up some examples. I have a limited understanding of Karvy, so excuse me if the examples doesn't seem relevant, but whatever little understanding of Karvy I had, I'd put together some examples. Security tradings. There's a company called T0.com in United States. These guys came up with a equity trading platform called T0.com, where there is only trade, there is no settlement. Can you imagine? Settlement was such an important element of equity trading. They completely eliminated or in the process of eliminating settlement. Why? Because the ledger is accessible to everyone. Everybody knows how the transaction has happened. So if I trade my shares on t0.com and that information is available to all the participants, I don't need share registry also. What does share registry do? Share registry says, so far this belonged to A sold it to B, so I'm moving the ownership from A to B through the share registry process. The fact that it has become a distributed ledger and then the information is accessible to everyone so that there is no double selling of equity. That's what share registry does, right? You don't double sell the equity so that the claims come back at a later point of time. With this becoming open, the settlement has been taken away and it auto settles on this particular platform. And the ownership is also auto transferred when a person sells equity from one person to another person. It's all, I don't have the specifics, but maybe you may want to, yeah, please do a deeper dive. But basically, they have demonstrated this. It's an interesting thing. This is, this was introduced by a company called Overstock. Overstock is a company which buys all the leftover stock in United States of premium apparel and then they resell it. And when they were doing it, they had a lot of reconciliation problems. So, exactly. So when they had a lot of reconciliation problems, they wanted to get in. Yes, please. Nobody owns the data. It's the network which owns the data. It's the nodes which own the data. There is no single controller of them. Yeah. 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 Good question. Good question. Yeah. So there is a community which runs this. It's like a community which is a global community which runs this. When the problems happen, the community discusses and comes up with solutions. I'll touch upon that. Technically, it is called as distributed autonomous organization. So all the nodes which are part of that, they form what is called as DAO, distributed autonomous organization, and they run the company. I'll get into the specifics when I get into the next one. Not really, they're not arbitration kind of a body. So it's like this, for example, if some of you, those of you are from the IT background, who developed Linux? There's not even a single person. One guy laid the foundation, but Linux has been developed by the community. It's an open source platform. So the concept is, it's an open business platform. The concept is somewhat similar to that. Sorry, you had a question. Yeah, yeah. No, it is only for the currently for the trade traded on t0.com. So you have to either buy or sell on that particular. You have to start from ground zero. Then you are either buying. You have to buy when you are starting on a ground zero. You have to buy. Then subsequently, when you have to sell, you can. This can be accomplished. There's another concept which. It's like it's exactly. It's like analogy is like BSE. Who can trade on BSE? It's only the BSE authorized stock brokers that they can trade on BSE. Right.
Now I want to buy Infosys in Tio.com.
Right.
Which means that somebody should have bought 5,000 shares from
Right.
the BSE.
Right.
And put it for sale in
Yeah.
in this Tio.com.
Understood. So that's why this is not. It is still not. It is. Yeah, but it is now not adapted still for an offline trading mechanism to the T0.com. They're using it basically for people who raise capital on T0.com. So I come as a company, then yeah, exactly. I raise a capital on T0.com. I do my issuance on T0.com. Then it becomes a base. So it is not completely replaced the.
Yeah.
Exactly.
So then it is not traded on NSE or BSE.
No, not yet.
or
Not
NYSE.
yet.
These are stocks which are traded
Exactly.
within this TO
Exactly.
community.
Not yet. So what these guys, sorry. What these guys have done is they've issued a bond. We know infrastructure bonds and all those bonds. They issued the first bond, which is called as a crypto bond. So they raised capital on this platform, which is a crypto bond, which does not have any share registry requirements or an intermediary requirements and stuff like that. The bonds which are sold on that particular network, they get auto settled, auto transferred, and all that stuff. There's one more technical aspect which facilitates that. So regulatory.
How does regulators have, it has to have regulatory place?
Yeah, so basically in US it is still not regulated by anybody. So now FBI is looking at bringing it under their purview in 2018. Why FBI? Because all this nefarious activities, money laundering, money transfer and all is happening. They want to bring it under 2018, and the Fed is also not thought about how to regulate it. That's the advantage of free markets, right? US is considered to be a very free market. That's why they're able to come up with initiatives of this nature. Having said that, recently Israel has shut down all Bitcoin exchanges in their country because they don't want this to fund terrorism and all that stuff. On the contrary, Japan has accepted Bitcoin as a legal form of currency. So in some of the Japanese government-owned organizations, you can buy government services using Bitcoin. So people are taking a completely divergent approach. Yes. Ethereum is $30 billion. Exactly. Exactly. Yeah. No. That is darknet. I used it as a separate context. If you talk about global e-commerce, Amazons of the world, or in India, the Flipkarts of the world, if you take all the summation of all that commerce which happens the worldwide, that commerce is only 3% compared to the darknet commerce, which is 97%. In darknet, even your browser like Chrome will not work. They have browsers called Tor, and Tor works on a computer-to-computer basis. Exactly.
Something like torrent is correct.
Exactly.
But this 70 billion dash is stashed. This is the currency.
So the way to look at it is like a gold reserve, and if you get a percentage of. Exactly. No, you don't, against which you don't issue. The value, for example, if there is one Bitcoin in your pocket. No, you don't need dollar equivalent. You just need a computer program. You've created a computer program. It started issuing coins, and then there is a market. Yeah, there is a market that has been created to buy those coins. It's like game currency. For example, you're buying a game. A currency has been created, and today you take that game currency, put it on eBay. There are people who are willing to pay money for that game currency. So somewhat.
Exactly what you started with. It is positioned on two counts. One, trust. Two, the old system of barter.
Exactly.
So
Peer-to-peer. I would say peer-to-peer. Peer-to-peer commerce. So one is the T0.com. The other one, smart contract. I'm now introducing another terminology which is very important in blockchain. A smart contract is a contract which is written in machine language, and two computers can interpret the contract and they auto-execute the contract. For example, it is being applied in logistics. I'll give you a simple example. I import. No. It is written either on Ethereum, using Ethereum virtual machine, or any of the blockchain protocol. If it is Bitcoin blockchain, smart contract will use the Bitcoin protocol. If it is Ethereum, they use Ethereum virtual machine. If it is Hyperledger, they use the protocol in Hyperledger. Now what these guys are doing is, for example, in import, people who are importing fish, let's say people are importing fish from European countries into a non-fish producing country. What happens is the fish during the transit has to be stored in an ambient temperature. If it is not stored in the ambient temperature, the produce will become bad and the consignment goes for a toss. Then now what happens, then you call your lawyer, he calls their lawyer, and they get into a litigation. Now what these people are doing, they're putting a thermostat in the consignment. The thermostat beams the temperature constantly to the blockchain network, and moment the temperature goes below the ambient or above the ambient, the contract is auto terminated, because the computers can read the provisions of the contract. So I don't want to, then as a party, I will not get into litigation, because there is data, there is information on a public domain where this small piece of thermostat, which is an IoT device, which is beaming temperature during the complete transit, and when it comes, even in middle of the transit, if the temperature goes out of the range, the contract is terminated, then the person goes and enters into a fresh contract. No litigation, no lawyers, no courts. Otherwise what happens, as an exporting company, I want my jurisdiction to be somewhere in Europe. As an importing party, I want my jurisdiction to be in India or in Dubai or somewhere else. They have eliminated this completely. I met a company in Singapore. I do mentoring of some companies in Singapore. They're writing capital table using smart contracts. How are they writing capital table using smart contracts? I'm an angel investor. I tell them saying, okay, I'll give you $10,000. You attain this much of sale, this much of revenue, this much of profitability. When you do that, my second leg of investment comes. And I'm sitting in Silicon Valley, these guys are sitting in Singapore. I don't know what they are doing. I don't have to review. I don't need management business reviews. I don't have to look into their quarterly reports, half-yearly reports, annual reports. All that they are doing is they are capturing that information into the blockchain network, and if those milestones are not met, my obligation to invest money has been done away with. So that is what is a smart contract. I'll tell you how smart contract will change our world. Yeah, it is basically a confluence of Internet of Things, and smart contract gives you governance. It is basically tomorrow, if you're, let's say you're served by a robot in your office and the robot doesn't meet its SLAs. So how do you control that particular robot? So you do that with smart contract. I'll show you some interesting videos. Exactly. Insurance industry is the biggest beneficiary of smart contracts. Vendor financing is a big beneficiary. IBM and S-Bank did a pilot in India where they reduced the processing time of LC from multiple days to few days. So they reduced the processing time from multiple days to few days because the information is available across the network. Then Axis Bank did a pilot for money remittance with Infosys between India and Dubai, where they were able to send money, because all these banks now want to come out of the control of SWIFT, and they want to do it. So you don't have to establish a correspondent bank, right? Otherwise, you need to have a correspondent bank, or you have to set up your branch in the foreign country, and that's how you facilitate international money remittance. Then comes the interesting thing from your world again. We have heard about IPOs, initial public offerings. Today we are talking about ICOs, initial coin offerings. So what happens in initial coin offering is, as a company, I go to the market. I am not registered anywhere in the world. Nobody knows who are my employees. I am not governed by any regulation. I come up with an idea. So there came an idea called Brave. Brave is a new browser that is being worked upon in the world, wherein the browser will pay you for browsing time. They're flipping the equation. Today you have to take Chrome, you have to take Internet Explorer free of cost. But what happens? You're surfing something, some stupid ad comes in between. By force, you're forced to look at that particular ad, or you get out of it. So Brave told the world, no more advertisements. Whatever time you log in, you accumulate time, and that time can be cached for a currency called Brave currency. And there is a value to that currency. And Brave raised $35 million using initial coin offering. Do you know in what time $35 million was raised? Any guesses? 30 seconds. 30 seconds, their ICO has been closed. No people to market your fundraise. You don't have to do road shows. So all those nice foreign trips for some of us have gone, right? No more such road shows or nothing. All that you have to do is an internet show free of cost from your computer. So internet is you're raising capital on internet to exactly. Exactly. Now you're bringing in a very valid point. Now you're bringing in the concept of computers and raising it, but everything is not good. There are some fallacies. I will talk about fallacies. So what did I get by investing in that ICO? I am getting coins, and then I'm using that coins maybe for surfing at a later point of time. They make it free. Today, if you see, all the internet business models are on concept called freemium. Your LinkedIn is freemium, right? Wherein you get free benefits to a certain extent. Beyond that, you have to pay. So this concept is also kind of a freemium concept where they raised about $35 million. I was reading an article yesterday. There's another company which raised $235 million in 3 hours using ICOs. So you may say, this is all, sounds very exciting. Maybe it will last for a day, 2 days and stuff like that. If you think like that, look at this chart. If I look at all the venture capital investment that was raised till the year, till today or whatever, when this chart was done in June, whenever it was done, venture capital has raised $295 million, whereas ICO raised $327 million. So now venture capital is the preferred form of raising money. The preferred form of raising money is ICO. So to understand this, this is from United States, pertaining to the United States market. This is published and this has been validated as well. So I'm excluding private equity capital and all that stuff. Right. So that is where it is. And now we've talked about few coins like Bitcoin, which is sitting at about $42 billion of market capitalization, Ethereum at $34 billion, Ripple at $12 billion. There's 710 such currencies in the world today. And they are traded in 2,300 markets. And the total market capitalization is $115 billion. No scientist today is able to validate this. It defies scientific logic. What are these coins? They're issued by programs, computer programs. And people are buying it. And we can think about, it's a fad. When fad happens, you can think about maybe $1 million business, $2 million business. We are talking about $115 billion of business all over the world, and that is the market capitalization of these 710 currencies. So I've got an interesting video from Bloomberg. It tells you about. Sorry? Again start, is it? No, it doesn't. It will not play. We check this out. This was, I was telling Mubashir, One person who always comes in uninvited to these programs is Mr. Murphy. So Mr. Murphy has come here also. I may need some technical help to play this video.
But have you tried it with the escape button?
Yeah, we tried. We tried. In fact, we played this.
Is that stored on the desktop somewhere?
Yeah, it is stored on the desktop. Because there are few videos. I think the internet is fixed. Yeah. So this is what I was talking about. You're getting an advertisement before you go to a video. So Brave kind of eliminates it.
Elaine, what's an ICO?
Well, an ICO is it's a crowd sale, basically. It's a way of raising money by pre-selling the things that you're going to build, or pre-selling access to the things you're going to build. So it's like Kickstarter.
But unlike Kickstarter, and so we're sort of familiar with crowd sales like Kickstarter already, but unlike Kickstarter, these coins, essentially, that they issue become speculative instruments in and of themselves, so people resell them and trade them.
Right. Well, you buy the coins and you basically have instant liquidity. But I mean, the main goal is to, raise the funds to build something that would serve as like decentralized infrastructure before it's even built.
And so, what do the coins get you specifically? Because they're not really equity, right?
It varies. A prediction market last month sold tokens ahead of time, and that the tokens are used to create markets or make bets on the prediction market. And a couple days ago, there was a browser that was selling digital advertising tokens, and the tokens would be used by advertisers to buy ads, and then the viewers of the ads would be compensated in those same tokens.
And I mean, the numbers are pretty impressive here. I think that browser one, I think it's called Brave, it raised $35 million in an auction that lasted all of 30 seconds, if I'm not mistaken.
Yep.
And so, explain it to a little further. So they're crypto assets, or they're sort of built on some of the same technology in which we're sort of used to talking about Bitcoin and others?
Yeah, so a lot of these tokens can only be purchased using a currency called Ether, which was originally created, and you could only purchase it with a currency called Bitcoin. These new offerings create demand for like the currencies that are used to buy them, and there's a lot of money flowing into it right now.
Okay. So as she was saying, she was also fascinated. She was pretty amused and fascinated about this.
The perfect sports car should combine sexy good looks with nimble steering, aggressive power, and a...
So she was also fascinated, and then, but I told you in terms of, you don't have to, one thing is, don't believe these ICOs that blindly. I didn't give you some data points. The guy who came up with Brave is the founder or the person who wrote JavaScript. The guy who wrote JavaScript came with Brave, and then he wanted to change the way the internet browsing, advertisements in internet browsing happen, or in the internet world happens, but he didn't have capital, so he used this ICOs to raise the money. So as she says, you're buying actually something which is a futuristic benefit, hoping that the value of that particular benefit will go up, and then lots and lots people will start, will go after that, as a result of which the demand gets created. Because of the demand, the premium gets created, the value gets created. Having said that, ICOs are just about 4 or 5 months old phenomena in the world. So people are still watching in terms of how it is. And one more important thing, how this value gets self-created is, if you want to invest in an ICO today, like Brave tokens she was mentioning, you can invest not through dollars. You have to, not through rupees. You have to invest only through Bitcoins or Ether. So it is so it is creating demand for these, automatically it is creating demand for these currencies. And last September I did a Tedx talk in Hyderabad. At that point of time, Bitcoin was valued at about $800. Today it is $2,800, $2,800. Luckily I bought some Ethereum at about $10. Today it is about $350. So in terms of, you can see how, and you don't have any, you don't need to, apply to any organization or anything of that nature. In India, you just have to go register yourself in a Bitcoin exchange. There are 4 exchanges that sell Bitcoins in India today. One is Zapay, the second one, legally. There is Zapay, there is UnoCoin, then there is CoinSecure. Legally, in sense, they're registered under the ROC Act, and you cannot start trading until and unless you do your KYC document. Your KYC document is PAN card and the Aadhaar card and your bank account. Once you have bought Bitcoin, then you can move the Bitcoin anywhere in the world. So the way I do is I buy the Bitcoins in India, move it to a wallet in US, and once I moved it to a wallet in US, I can do anything. And the US guys haven't even asked, they don't even know me. They haven't even asked even a single identity document, because that's the approach they have taken. Here they have not taken that kind of an approach. And RBI, they've said that you use a bank account. You can do either you can do a through net banking, or you can do through IMPS, or you can do a fund transfer in the normal case. Yeah, RTGS, NEFT and all that stuff. So RBI kind of said, in fact, Raghuram Rajan was supposed to come with a consultative paper on Bitcoins and cryptocurrencies, but his term, as we all know, kind of ended abruptly or whatever has happened. So they have not come up with an approach paper. They're basically saying, deal with these cryptocurrencies at your own risk. And the IT people came with a provision. They don't have a separate section under which you can, for example, I'm sitting on a capital gain on Ethereum, and if I sell, then I have to declare those capital gains. So they're basically saying there is no provision to tax you, but you can declare it as another source of income and pay tax rate on that. So the regulation is not very clear. But some progressive countries or countries which have no other option, for example, Cambodia doesn't have a intermoney remittance facility because the country, long spread, the banking system is not well developed. The central bank simply came with a consultation paper. They asked for people who can set up a private blockchain network for Cambodia government. And once the private blockchain network is done, they're going to facilitate transfer of the Cambodian currency onto that particular blockchain network. And Tunisia has also came up with a concept called e-dinar. They're putting dinar on the blockchain network. Philippines, now that more and more people are using these services, they're coming up with e-peso on the blockchain network. So I'll pause here for some time and can take questions, because now I'm moving from professional world to personal world, because it's also going to get a lot more exciting as we go along.
There are a few questions,
Yeah,
few points that
he does.
One is about the legal status and
Right.
the regulator.
Right.
Which regulator is going to own this process.
Right.
Second is there are transactions which are initiated by the customer
Right.
and could replace a SWIFT or anything like
Correct.
that. There are transactions in our business which are initiated by the issuer and by the mutual fund and
Correct.
insurance company.
Correct.
Which is like a dividend,
Right.
or a rights issue,
Right.
or a bonus issue,
Right.
or whatever.
Right.
Now those transactions cannot be self-fulfilled by a distributed ledger. Somebody has to say, okay.
They have to become party. You per se will not be able to do that. All the people in the ecosystem have to become a party to that.
Therefore, that function of the registrar to administer that service,
Correct.
I'm not seeing a challenge there.
Right.
The other thing is this system works like a parallel currency.
Yeah.
Economy and a parallel currency. So whatever 115 billion valuation and all that is there, to me it sounds like black money being put there because people are
Could be.
and it is not
Created, it is still not mainstream. But a lot of people are using it for business applications like vendor financing that Yes Bank is doing with IBM, money remittance that Axis and ICICI are doing with Gulf banks. Now SBI has come up with an initiative called Open Chain. Anybody can become a part of that open chain, any financial institution. Yeah, for the customers. Through blockchain. No, through blockchain. That's correct. So as I said, Bitcoin, yes, bank is with IBM. So as I said, Bitcoin has got a lot of bad publicity. There are some fallacies in Bitcoin, but the underlying technology, we should give weightage to the underlying technology. Like like Open Chain, they're trying to build free flow of customer identity information across the banks. Yeah, one could say that Aadhaar is there, so is there a need to do something in parallel to Aadhaar? But some banks are pioneering it. Actually, there is an organization very much in Hyderabad called IDRBT, Institute for Development of Research in Banking Technology. So RBI has asked IDRBT to come up with a consultation paper. 40 financial institutions got together and on blockchain. They came with a consultation paper which is given to the ministry for implementation. Since it is taking time, the leadership in SBI said, let's not wait for those things to come through, but as an individuals, let's get together, or as an organizations, let's get together. And they gave rise to what is called as an open chain. For instance, I know in Hong Kong, I met few people who are doing eKYC because they don't have equivalent of an Aadhaar or anything. So they're doing their entire KYC on a blockchain network. So businesses are building applications individually. I really do not know what Computer Share is doing with NSE. It may be doing it for settlement, or it may be doing it for reconciliation purposes. No, please go ahead. Absolutely, I thought as much. Correct. Right. So these are the applications they are building because
but those are not threats,
no, it wouldn't be threat. It is like, okay, if I may answer that question, if you go and look back in videos which are available, actually one of my professor from Columbia Business School asked the founders of BlackBerry about Apple. This was about 10-15 years ago. Yeah, they said, some silly things get pushed on a phone by a touch of a button. It will not do anything to us. And what has happened? Research in motion, which was such a beautiful technology. Exactly. Now they are coming on Android. BlackBerry is adopting Android. So the point is, when it will become mainstream, when it will dislodge your industry, if I were to say that, I wouldn't be able to do that. But taking a cognizance of that and then seeing what you can do. I put in the parting slide, I put some ideas where you could possibly look at an involvement from a Karvy's perspective. I will share that with you.
That's
but
exactly what we need to do.
Exactly.
If you can't fight an enemy, make him his friend.
Exactly.
So how is it that we could make
In agreement with you, it has still not become mainstream. Maybe 5 years later when do this session, there is no need for this session because people would be talking about driving adoption on blockchain rather than what is blockchain. So we do not know. But as I said, if it is created something like $115 billion of value, there is something which is going, which is not just a fad. So it is like the position that community takes, right? For example, I get asked this question all over the world. So I use one just example. Take one nice villa on this road, right? Who decides value for that villa? The fundamental value of that villa is far lower than the market value. It's a public demand. It's what do you call? It's expectations. If the group of people come together and say, hey, this is a fantastic thing, this will increase by 10 times, and everybody in the town is talking about that, what will you do?
Your investment $10 is the face value.
Correct.
And 350 is the market value.
Correct.
That's the kind of.
That's the appreciation. That's the appreciation. So that underlines, that defies the logic as to who decides a value. Is the case with asset. Probably why this becomes important is maybe when gold was mined, it was just an yellow metal. Who decided value for gold? It's the communities over a period of time started deciding value for gold, right? So in a similar fashion, you have an opportunity to participate in something which is getting created, and the beauty is you still can participate in that as a founding participant. No, this is intellectual capitalism. No, the supply is limited, right? Bitcoin is only 21 million. The code is written in such a way.
If you talk about gold, you know that the reserve is already years.
Yeah.
You have only these reserves.
Correct.
These people can produce.
Correct.
So there is a finite amount of mining.
Very good point. Even in this cryptocurrencies, the value, it can't go on the community which is produced in the first instance. So the Ethereum Foundation decided that there can be only 90 million Ethereum coins or Ether in circulation. No, originally only 2 people. Now the foundation has all the major IT companies. Take any IT company, they are part of the foundation today. Microsoft is one of the biggest supporter of Ethereum today. Yeah.
You spoke about the appreciation in the past 14 months ago.
The fundamentals are fantastic. It's a great stock, but it doesn't get a bull run. Absolutely. So the concept is similar here. It's speculation. Speculation, then applications, and it's also betting on technology, right? 10 years back when Elon Musk came with Tesla, nobody believed him. Today, everybody wants to put money, including Jack Ma, then Masason, SoftBank, Jack Ma, Alibaba, all of them want to put money in Elon Musk, right? And that's why his ventures of sending people to space has also become over-invested. Because it's either trust, speculation, or the approach that you take towards that particular business proposition. Okay, now I'll get into how it will change your yes, please. Which one? There was no face value when it was created. There was no face value when it was created.
You can have only 9 million coins issued.
That is the supply.
Supply.
Yeah.
The supply need to come on.
Exactly. So if you ask the group or the person, Satoshi Nakamoto, when they came up with Bitcoin, they never thought that it will become a currency. All that they wanted to promote is a peer-to-peer transaction and use it as a reference for that peer-to-peer transaction, which has become a currency, which is like, as he rightly said, 200 years or 2000 years, that's how it has evolved, right? First they were exchanging leather, then some people exchanged paper, then somebody found gold and they said gold is a much better method of exchanging. Then think about when paper currency was introduced. If you were in that period, if government would come and tell you, give all the gold to me and I will give you paper currency. More because, as I said, our world is becoming a lot more connected. So I just want to show you one video and then I'll talk about in terms of, this is not futuristic video or future world. This is available today in Japan.
ねえ起きてってばおはよう
おはよう。
あ今日雨が降るかもしれないから傘持って行って急がないと遅刻しちゃうよ
Right.
行ってきます。
行ってらっしゃい気をつけてね
状況ページ、商品のラインナップについては
おかえりなさい
なんかさ、家で誰かが待ってるっていいもんだな。さっき思ったんだ。帰ってくるとき。おやすみ。
おやすみなさい
So don't ask me what will happen to matrimony.com after this comes to India, but this is nothing but virtual reality. This is virtual reality, and it happens in Japan. It became more popular in Japan because Japan has the largest number of single households, highest number of unmarried and single households. And what we saw in this video, it is nothing but IoT. In the back end, it was IoT, right? It was IoT which is happening, but you want to bring in an involvement. When you want to bring in an involvement with IoT, they created a character, Azuma Hikari. It's a humanoid, it's a robot. Now, how blockchain will play an important role in this is what controls the contract mechanism between that humanoid and that human, right? In the morning in the video, it said there could be a rain. Can you please take an umbrella? And then it rained, and then he took the umbrella, it helped. And it can control anything, order food, heat food, and stuff like that. And there is a governance system that needs to happen between this humanoid and the human. And there also has to be a payment mechanism. For example, you pay that maybe micro amounts. You don't pay significant amount of dollars. And you would have noticed when he was drinking coffee, she was also drinking coffee. Right? It's virtual reality, and probably it may come to a point where she says, my coffee is out of stock, can you buy me a coffee? What will you do in that scenario? Will you deny coffee to that person? You will not deny coffee. Yeah, if it was $100, you will deny. But if it is 10 cents, you will pay 10 cents. Now think about how do you process that 10-cent payment? Will you use internet payment gateway? Will you use an acquirer bank to process that particular payment? The cost of servicing that 10 cents payment may be few dollars. So that's where blockchain comes into the picture, where all these cryptocurrencies which I was talking about, you may say that, you said each Bitcoin is $2,800, but do you know that you can hold Bitcoin in 10 to the power of -8 decimal? That is the smallest unit that a person can buy in Bitcoin. So if you divide 2,800 by 10 to the power of 8, whatever is the unit, that is the smallest point in which you can get the Bitcoin, and you can use that smallest point to pay. So as somebody has rightly pointed out, for IoT, the natural convergence is blockchain. So now the other thing, you may have come across an article that in China, people today are sharing umbrellas. I go to office, I bring an umbrella, I don't, then, I'm gone in a car, I'm not using an umbrella. Somebody else needs that umbrella, technically I can rent that umbrella to the other person. So the world is now moving into a sharing economy. It is no more about asset ownership. Why are we forced to buy assets? Because we can't buy it in a ownership basis. For example, think about the charters industry. All the big businessmen today are buying flights because they can't get a fraction of a flight. Comes EasyJet in UK, again, and one of the fellow alum from our school, and they are coming with a concept where you don't have to buy a charter, but you buy time on that charter. So if I buy 30 hours on that charter, the entire flight is available to me for 30 hours at a fraction of a cost. So lots of companies are coming up with these sharing models. So if that sharing model has to take a mainstream, let's look into this company called Link & Company, what it is doing with cars. So this is the next stage of Uber, right? There is no driver. There's no manual intervention. You just put it on your mobile and said, my car is available for sharing. Then the network does all the KYC and ensure that this guy is not a thug who will get into the car and run away. Ensures that the car is available in that particular time slot. Your payment is done. The contracting is done. Everything is done in that particular time frame. And this is reality. I'm not talking about some clip from some Hollywood movie. This is happening today. And more assets will get into that kind of a sharing basis. Let's look at something, I kind of, before I get there, let me complete this. I kind of came across one business unit in your group which does renewable energy or something. Maybe, I don't know if it's a solar energy business or there's an interesting video of how the solar energy gets produced between two individuals and exchanged. But before that, just to complete the thought on the cars, now let's say you're living in your neighborhood. Your neighborhood has at least 100 cars. What prevents you from driving your neighbor's car the other day? And then the third neighbor's car the third day, the fourth neighbor's car the fourth day. Technically possible, but we don't do that today because it is manual. You have to come into a relationship and all that stuff. So blockchain can give you that governance system and the payment system, and it is no more about sharing. In fact, some companies are now talking about models. The chips that we buy in computers, we use a capital purchase model, right? You purchase upfront, you purchase the chip and then replace it when the new version of the chip comes. Now some companies are working where they're going to place a chip in your phone or in your computer, and then you pay per transaction. You don't pay upfront money for that particular chip. Every transaction it processes for you, or the number of hours a processor runs in your computer, you pay paper usage model. So that is where blockchain is going to completely transform the business model, the commerce model. Yeah, absolutely. The company will put the caps. If you look at all the license model to the current on-demand model, Most of them are moving away from the license model to on-demand model, right? That's because they're finding a better penetration and a better adoption. Even if you take Microsoft 365, now it is going to a SaaS model. So the concept is similar. Yeah, please. Thank you. So this is about a community in Brooklyn where they started trading energy using blockchain and blockchain linked.
One of the primary reasons we chose Brooklyn to develop the first community microgrid was because of the high concentration of existing solar electric plants. But the reason we chose the community is the people. Let's meet a few.
If you go down to the cellar on a day like this, you will see that the meter is going backwards. So we are an energy supplier.
Everybody in this community pays an electrical bill, right? Funny enough, the one thing you can't seem to buy in your community is electricity. Brooklyn Microgrid is working to change that, to keep the money you spend on electricity in the community, so it continues to be spent where else but right here.
Right now, we're in the heart of the Brooklyn microgrid. To my right, the Gowanus. To my left is Park Slope. So why buy locally generated renewable energy? First of all, because you're not polluting your own neighborhood. That's the biggest thing, right? Secondly, resiliency, resiliency, resiliency.
So the next time there are these rolling blackouts or a superstorm comes through and knocks out all the power, Brooklyn Microgrid will work to make sure the lights are on in critical areas so that you have a safe place to go, to get warm, charge your phone, get food, and send out emails to let people know you're okay.
Yeah, I'm George. This is my brother Willie. We grew up in the Gowanus, and this is our office right here. Everybody has to do their share, you know, and it's got to start someplace. Everybody invest in solar panel, or whoever can afford it, or buy power from their neighbor.
I'm interested in the microgrid because I would like to sell my power locally and have the dollars stay here in Brooklyn.
What's the embargoed? You still don't want, am I allowed to put this on Twitter, or are we not saying anything?
So what the tag element and the transactive platform enables us to do is records the excess electricity that a system such as Eric's PV panel here produces. It puts it on the blockchain and facilitates exchanges, transactions between neighbors.
So blockchain's really just a distributed ledger. So whereas normally, in order for you and I to share some information, we'd send it someplace on the internet, you'd send your information, the central place would figure it out and come back to us. Now we both share it both simultaneously. So it allows for distributed actions, transactions, all of these things that do not require a central repository.
That money that other people who consume that energy are willing to pay is going to be given to those who are producing the energy, and that money will stay in the community. So you have a nice economic benefit with energy being produced and consumed in the community, green energy, and the economics are such that more solar panel systems may be constructed here in the community and put more people to work doing that.
Brooklyn Microgrid is community-driven and wants to provide a path to investment for people like us that never had the opportunity. People that live in places like the Gowanus houses.
So this is how it breaks down. There's a higher demand for local renewable energy. That sends a price signal to your neighbors to get with the program and invest in cleaner assets like solar power, CHP, or even batteries. Get with Brooklyn Microgrid. Together, we can clean up the air in our neighborhoods, invest in local energy resiliency, maybe even set a standard for the world to follow.
I mean, after all, it's your energy. You should be able to do whatever you want to do if you're producing it in excess. They're your electrons, right? Don't forget that.
So like you want to put a solar panel on top of your house and you're producing excess electricity. Today, what do you do with that excess electricity? You don't tell your wife or your kids to spend more time on computer or TV just because you have excess electricity. You just give it away. So now these guys have come and then put in a mechanism, and as you observed, they're saying now they are energy producers, they are not consumers. So their meter is going backwards ever since they put that. So they're not only producing energy for their own consumption, but they're also selling it to the neighbors and getting money. It's a much faster ROI. Return on investment, it's a clean energy, it fulfills all the requirements, and you don't have to depend on a grid, the central grid. And we know, in terms of no disregard, but you know the AP Transco or the Telangana Transco and what kind of stuff that happens and the outages and stuff like that. So that's how the personal world is going to be transformed. It gives you, if you have an idea, if you want to basically convert that idea into a implementation, you not only benefit by meeting your own consumption requirements, but you also earn money. And then this is all clean energy. So no government, nowhere in the world is going to come and tell you saying that don't do this illegal activity. You will get incentivized a lot more for doing this. So that's how I've taken, there's zillions of such examples in blockchain. An interesting example is in Alibaba 2 years back, 12 synthetic stones were sold as diamonds. 12 synthetic stones were sold as diamonds on Alibaba. And when it came into picture, people were shocked. They didn't know how to identify a diamond, authenticate a diamond, and person was willing to pay money for that. So there's a blockchain network called Everledger that has come into existence, which will help you track diamond ever since it is mined, from whichever mine it is in the world, to the point, to the polishing houses, to the finishing houses, wherever they are in the world. They put everything on the blockchain network so that information is available to you. What kind of an hologram you can put on a diamond? You can't put any hologram. Even if you put, people will duplicate that. So this is a technology which is available to, like that. There are several other examples in the healthcare space. An insurance company is giving smart watches to all the people, and then based on your sports activity, they are rewriting your insurance premiums. So I and my friend take the same health policy. Why that fellow doesn't exercise, I slog. Why should I pay the same premium as that fellow who's a lazy bum? And then I'm working a lot, so I should be paid a lower premium compared to my friend, right? So that is possible with an IoT watch on your wrist. You do that, and your insurance premiums become dynamic. So what is more important is applications. One is technology. If you ask me who led to adoption of cloud, is it Amazon Web Services? Is it the hardware manufacturers? No, it is the application developers. So cloud became more popular because you had Facebook, you had Twitter, you had LinkedIn, you had Instagram, you had various other businesses that came up on the strength of a cloud. They made it more popular. So similarly in blockchain, the application ecosystem is very, very important, and that's why Ether is increasing. Discount the speculation aspect. Ether is increasing because you can write a lot more applications on the Ethereum network. You can access Ethereum virtual machine, and you can write lot more applications on that. So finally, with a very limited window, what I tried to, I had some suggestions. Probably you can look at t0.com and see what is happening, probably internalize the knowledge over there. You could possibly scan the ICOs market, and maybe you can be associated with some ICO. Sounds part-breaking, but you can certainly do that. And what is now happening is, today I handle at least 15 calls from friends and acquaintances. They call me and say, "Acha, ye Bitcoin upar chale gaya, main kya karu?" So they'll say, yaar, yesterday night in the fit of excitement, I put 10 lakhs in the Bitcoin. Ever since I put 10 lakhs in Bitcoin, I'm having sleepless nights. Do you think Bitcoin will crash? So I'm handling at least 20 such calls in a month from friends and acquaintances. These are good friends. And I start consulting one guy, they say, Yeah, this is a very close friend in the office. Kar lena, please. So then I spend about half an hour advising that person. So you could possibly look at, you do wealth management services. Why don't you look at cryptocurrency as a wealth management? Cryptocurrency will become an alternate asset class. Believe me, it will become an asset class. And if it is being recorded, if it becomes an asset class, you do that, Karvy will pay me IP for that. Okay, so then become a part of R3CEV or Hyperledger. I know you have a derivatives business. There's an organization called DTCC in United States, which is looking at transforming derivatives trade using blockchain protocols. And these are all open source associations. Nobody will deny you an entry into that. You just have to establish yourself, ask for a membership. Hyperledger, you can become a part of that, or your technology partner, whoever is your technology partner, can help you to get into this. And then possibly, because a lot more change is happening in your own world, and if there's an opportunity for you to get associated, I would encourage you to get associated, and I'm always available for free consultancy. IP, that was we'll talk about it offline. That's about it. Thank you so much.
Very good. Thanks a lot.
Questions? Any questions that? No, it's basically the information is transmitted across the network. Exactly. That's correct. There are multiple protocols in that. One, it says you transfer all the information across the network. Then it becomes automatically, when it becomes huge, then the scalability issues will come into picture. So they have concepts. If I have to get into the technical terms, earlier Bitcoin is based on a protocol called proof of work. So all the work that I did has to be transmitted to all the nodes. Then I'm looking at a huge gigabits, terabytes or gigabytes or whatever is that, zillion bytes or whatever is that data. I'm looking at sharing that particular data. So the improvement that Ethereum did is, okay, don't transfer the entire proof of work, but establish that you had a stake in that piece of work. It's called as POS, proof of stake. Then now they're going, okay, you don't have to share the entire proof of stake to the entire network. You share it with the relevant nodes, which is called DPoS, distributed proof of stake. Then another protocol came called proof of audit. Okay, you have a stake, somebody else has confirmed that you have a stake, you transmit that information. So the protocol itself is evolving. Sure. Right. Sure. So in terms of disputes, there's a current dispute which is happening today. The dispute is called Bitcoin scaling issue. So Bitcoin, what has happened is the block size is 1 MB. I told you every 10 minutes a new block is getting created. Since it is 1 MB, the space to store transactions is limited, because of which the demand for the next block is increasing. When the demand for the next block increases, the price for the next block also increases, which is technically called as the Bitcoin fee. Now the community has come to a conclusion that they have to increase the size of the storage. So they said, let's take it to 2 MB. So the block which was 1 MB will become 2 MB. But the community is now fighting. If I get into this, there's an article that I wrote on LinkedIn. You can go and refer to that. But I'll just simplify it. Basically, there are two communities which have come. One which is called as a SegWit 2X, and another one is called as a Bitcoin Improvement Proposal 148, BIP 148. Both of them agree that it has to be 2 MB because the size has to increase. But BIP 148 is using what we call as a soft fork. That means once you make the changes, the previous components of the network will also work, even though the protocol has not changed, and the new thing will continue on a new protocol, and they required something like 95% of the network to adopt it. Whereas the SegWit 2x is saying that no, it has to be a hard fork. That means previous network will be on old protocol. From now onwards, it has to be on a new protocol. But I need 80% validation, 80% buy-in, and not 95% buy-in. Now both the communities are polarized. Some are in favor of this, some are in favor of it. Then they are going to debate. Anybody who, you can also participate in that if you have an involvement in Bitcoin. And then finally the majority wins. It is like more like a cooperative kind of a system. And in Ethereum, when this has happened, what has happened in Ethereum was they established an organization called DAO, Distributed Autonomous Organization, and all people started putting their Ethereum currency Ether into DAO. When they put Ether into DAO, one guy came, he found a problem in the code, he took $80 million worth of Ether. So when he took $80 million of worth of Ether, all these coders came and they came with an initiative called Hack the Hacker. So they went and hacked the hacker and they brought back the currency. When they brought back the currency, they wanted to no more continue on the old network. They wanted to continue on the new network. So they continued on the new network, which is created what is called as Ethereum. But there are 5 people who wanted to continue on the old network, which resulted in another currency called Ethereum Classic. Now both are coexisting. Why the 4 people didn't want to come into the new one? Because as I said, the fundamental principle is immutability. You cannot change the blockchain network artificially just because something has happened. And they wanted to protect the sanctity of that immutability. But majority of the network went, and economics today, if you look at the new Ether is about $350, Ethereum Classic is hardly $20. So it's like a, if I put it in a very raw format, it is kind of a franchise system. And then basically whichever community is able to, whoever the group is able to convince, they are able to win over. And some of them convince because they control the nodes. Technically it's called as hash power. That is why one group said only people with, if we come to 95% of collective hash power, the new protocol will come into implementation. The other group is saying no, not 95%, do it with only 80%. So ICO and crowdfunding, the concept is similar. You heard about Kickstarter? So a Kickstarter, people go put their project, then you invest in dollars and all that stuff, but you have to be legally listed company, then you share all that with Kickstarter and all that stuff. Whereas in ICO, you don't have to be a legally listed company. Your group of people who have come together, for example, today 4 people can come together in India, they want to do solar energy, they can do a solar coin. Without any government regulation, without any government sanctions, I can put an ICO called Solar Coin on the ICO marketplace, and if people are willing to invest money, I raise money and then I work on my initiative. That's the difference between ICO and the normal methods of crowd investment. Yeah, sure. Yeah. Right. And that's what I said. In terms of, it varies on the protocol called proof of work, proof of stake, proof of audit. They're evolving. Even though the data is available, it is like, okay, the analogy is like this. You put your you put your house on the Google map, right? Now anybody in Hyderabad, anybody in the world will know you went and tagged your house on the Google map. But the contents of the house are only available to you because you possess the keys. I don't have those keys, so I don't know what happens inside. So that is what is a public key and a private key. So the information in a private key is not accessible to everybody, but the information in a public key is accessible to everyone. Exactly, both it exists. It's a combination of, your keys is a combination of private and public. If you want to, for example, let's say there is an IP address. If you see the Bitcoin address, it all is a combination of various alphabets. At the back, it is corresponding to an IP node, right? And that particular thing, if somebody pings that particular IP node, if he doesn't have private keys, he cannot take your Bitcoins. But he knows where your Bitcoins are or where your cryptocurrency is. That is how it is architected. Then the node they can trace. Like the program today, Bitcoin is 21 million in circulation. There are only 16 million coins that have come out. 5 million coins will come out till 2040. For example, if you know how those 5 million coins which are in blocks are coming out, you ping a block, then you can claim ownership on that particular block, saying that, hey, I discovered this block. It is just like mining gold. Once you get that, you can claim ownership, but you cannot claim the value until and unless you break the key. And that key is an algorithm. And if you solve that algorithm, which is a complex mathematical formula, you solve that, then you get a private key. Then those bitcoins in that block becomes yours. That is what is mining. Yeah.
That's the fund transaction.
Correct.
But a lot of other things are also dependent on that. So for example, your treasury input.
Correct.
Your input to treasury.
Correct.
Apart from that, various other MIS
Right.
which get out of it. There's a lot of 90 jobs.
Correct.
Data warehouse gets created.
Correct.
This entire ecosystem is very complex.
Right.
How would this, so eventually people will keep solving one and then the other.
No, that is if you use the public blockchain. But if you use a private blockchain, there's a blockchain called Ripple network. The way it happens is you have to buy the Ripple currency, which is XRP. And you buy that currency, and when you're transmitting money, you're transmitting Ripple. Then the bank on the opposite side receives those Ripple, keeps it in its repository, converts it into cash. When the customer of that bank wants to send back money to the customer of your bank, then that XRP comes. That's how they have implemented. So here there is no treasury input or anything of that nature. I'll tell you how ICICI has done. ICICI runs on a Finacle core banking, and Infosys is the owner of that core banking, right? So Infosys has built a blockchain money remittance module in Finacle, and they opened it for ICICI. And on the other side, Finacle's customer in Gulf is Emirates NBD. And Emirates NBD also has a Finacle, and they also have opened a blockchain module on the Finacle. And these two core banking systems are directly talking to each other. Exactly, they do a direct handshake. It's a closed loop or a private blockchain kind of a thing. This is basically the way it's that when the conversion happens, it's bound by treasury rates. Exactly, your treasury gives the guidance. But as long as it is in the blockchain network, there is no conversion. You're only exchanging, units of value. Absolutely. There you go. Land records. So the country of Georgia has implemented this. Unfortunately, it didn't. Because of some political things, it has not happened. But Indian government is looking at it because, as you know, in India there is no title insurance. Title insurance cannot come into India because your land records are still held by Panchnama, the old Panchnama system, which is archaic and nobody has information into that. So Indian government is seriously looking into that. We are working with government of AP in my own company. We are signing an MOU where we are doing a world's first blockchain prepaid with government of AP. Chandrababu Naidu is very kicked about it. Which one? They converted them. Okay. So lots of countries are doing it. So basically, still it is not gone into mass scale adoption, but it is not limited only to proof of concept. It is somewhere between mass scale adoption to proof of concept. It was like how cloud came into existence in the initial days. So there was optimism as well as there was skepticism. Pardon? Sorry, I don't have a background. If you can give me a background on that. Oh, okay. So there is Polonix also, which is there. So what has happened is, in terms of the issue was not with blockchain. The issue was with associated applications. They were compromised. When the associated application was compromised, they got an unauthorized access into that particular network. Even yesterday it happened. Ether dropped to 10 cents for a fraction of a minute when somebody has put a sale order of 1 million Ether on GDAX exchange. What has happened is, when somebody offered 1 million Ether suddenly on the exchange, since it's market denominated, the supply shot up like anything and the demand was much lower. So the computers auto calculated the currency cost and it went to 10 cents all of a sudden. It's not because of loophole in the blockchain system, it is loophole in the associated systems or associated applications which were running it. So same thing happened in Dow, as I mentioned. That guy stole 80 million worth of Ether because there was a problem with the code. It doesn't mean that he vanished with 80 million. So this group went back, like a Robin Hood group, they went back and they stole it back from that particular person, because you exactly know where that money is lying or where those currency is lying on a world wide web, since it's on in a blockchain network, the Ethereum one, the Ethereum hack that has happened. So that particular thing, I don't know the specifics of that, but what you're mentioning has also happened with Polonix exchange, Bitfinex exchange also in Hong Kong, where $100 million worth of bitcoins were lost, not because of loophole in the blockchain protocol, but somebody had an unauthorized access into the network. It's like an internal fraud. So even in bank, if somebody wants to, it's an internal fraud, insider trading. Mm. Right. Right. Yeah, if you see today, Microsoft Azure as a blockchain ready version, you can run blockchain on Azure, which is a cloud again. You can run blockchain on Linux. So all these from a server and an operating system perspective, it is the same thing. Yeah, it's the same thing. There is no change in that. All that you may need is a extra computing power. That's about it. It doesn't mean that the old servers will go out of toss or anything of that nature or out of use. So Microsoft Azure is now, they want to push a lot more on the blockchain, especially Ethereum, and because IBM is pushing Hyperledger. Sure. Right.
We have a number of business rules in mutual funds, corporate registry, how much a person can invest in a share,
Right.
what would be the load applied on that, what
Right.
are the other tax to be deducted,
Right.
STT, and
Right.
so on and so forth. There are many business rules
Correct.
which make us thrive.
Right.
In a way. Okay. Now, how would that get adopted?
So in terms of in terms of, so one, either you have to reinvent that to meet this particular thing, because as I said, most of the businesses in absence of blockchain were force fitting offline processes to meet the online requirement.
No, my question is different. My question is, how would blockchain be a threat in that?
They would be internal regulators also, what do you call it?
Yeah, the nodes, that is on a public blockchain. Okay, having said that, one thing which good that you give me a good. Yeah, it could be. I don't know how you classify in that ecosystem. That it could be. But having. Yeah. Yeah, his question was more from a perspective. Yeah, having said that, one thing which I didn't make an observation, blockchain is not a cure for all the problems. It's a good technology. For example, if you look at all the banks, they formed a consortium called R3. And R3, when they raised money, they wanted to overcome SWIFT. And all major banks have invested in R3. And R3 wanted to do blockchain-based protocol. They studied. They went back and told the investor community saying that we can still accomplish our business objectives, but blockchain is not required. Then the entire investor community became angry, saying that what is this? I thought you will go down the blockchain path, but why didn't you go down the blockchain path? So sometimes what happens is, if we like a technology so much, we try to force fit that particular technology. So I don't know if I've answered your question fully, but there are alternate technologies that are available. You are the best judge in terms of which process, which technology meets your native requirement better compared to other alternates that are there. Right. Exactly. But one thing from our personal life, my personal prediction is, all those routers that we keep in the house to connect to internet, I am of a very high opinion and confidence that very soon blockchain routers will come, wherein you use a blockchain router to plug into all those applications that we saw in our personal world. About dealing with IoT, sharing with your neighbors, peer-to-peer commerce, all of that stuff will come into existence. That is going to happen for sure. In an organization perspective,
So you both live in a shared
economy,
Wi-Fi,
exactly.
internet world.
Yeah, not Wi-Fi, shared asset world. It's like, for example, I'll give you another.
That through internet, right?
Yeah, you will access through. That's why I said you need a blockchain router. For example, we all know Dropbox. Dropbox is today $10 billion. There's a company which is coming called store.js. If you sign up with store.js, of course, you need to have a little bit of a coding knowledge. The unused hard disk space on your computer today, you can offer it to anybody in the world in a secured fashion, and you get paid for that because it's lying idle in your computer. You're sitting on maybe 14 GB, 20 GB, or whatever is that, 1 TB.
That's what torrent used to use. Your computer space.
Right. I don't know about torrent, maybe. So, but in terms of, the models are coming that way. It's more about, it's about somebody wants to buy an asset, let him buy. But I'm not happy buying asset. I want, like today, most of the people at least in Delhi, They stopped driving their own cars. They're dependent on Uber.
WhatsApp and other stuff going around. Why a Uber in a 10-20 year perspective would be cheaper than
Exactly. So the concept is similar, but it'll take you to areas where we have not thought about. You know, you have so many assets lying idle. Like China, I said, they're sharing umbrellas and they're paying. They're sharing cycles and they are paying. Pardon? No, Mobike is still popular. It's there, Mobike. We met them recently at NASCOM. Oh, is that so? Okay. But Mobike is, I don't know if it was Mobike, but Mobike is doing very well. Yeah. No, so that depends on the economy to economy, right? If you go to London, the Barclays cycle sharing schemes work so beautifully well. But if you want to do it in India, you put a cycle, somebody will come steal that cycle and run away. So it has to adapt to the local economy. Sorry, you had a question. Yeah. Right. Right. No, it's the computing power is the trust. The computers are the trust creators. Absolutely. From our own example, I'll give you an example. 15 years back, I asked my mom to go to an ATM and withdraw cash. She would never do that because she wouldn't trust that the machine will dispense money equivalent to what she punched. She always used to go to the bank, take a teller token, say hello to the teller guy, ensure that he counts 2 times, she counts 3 times, and then she used to come, right? Today, what's happening? Nobody does that because there's an implicit trust that has been built. Of course, we're still not depositing cash into the ATMs. You can do that, and it is accurate, but we don't put money into the envelope, put it into the ATM, and ATM generates this thing. But for dispensing, the trust has already been built. Whom are you trusting in that scenario? You're trusting a computer. Because it takes time for that behavioral change to happen. Yeah. So here it is community. Exactly. It's a community. It's a community that will. They're not bound by laws today. So that is an individual perspective. Yeah. To a large extent, it's an individual perspective, right? Pardon? It all depends on the perspective. Like I said, simple example. Today there are multiple people who put even large amounts of money into an envelope and then just put it into the ATM because they trust it. It has worked for them as well. It's worked for them.
I think long story short is we have to hit blockchain before blockchain hits us. So we have to learn more, adapt to blockchain.
All that I'm saying is in terms of, it could be a Gartner hype value or whatever it is, or gets excited, the analysts get excited by it. But unfortunately or fortunately, that is no more the mode. Today, you see, earlier blockchain was a topic limited to conferences. Today, we are talking about, it's not a conference, it's a knowledge sharing that we are doing. So it is becoming more and more mainstream, and you have put it very, very aptly, saying that before it becomes a phenomena, exactly. How do you plan for it? At least it's a known, from an unknown risk, it becomes a known risk. Let me put it that way.
So we have relationships with BSC, Access, and a couple of other and all.
Right.
So we will start engaging with them in understanding what they are trying to do.
Absolutely.
And so that there is a practical experience.
Exactly. So IDRBT, another resource which I mentioned to you, and then your tech vendors. Ram Shastri is the Ram Shastri. I'm happy to do an introduction. Yeah. Yeah. Exactly. Exactly. Yeah. Yeah. Absolutely. There's a gentleman by name A. Ramashastri. He's the at IDRBT. He's the dean. He's the dean of that IDRBT. Then there's a professor called Nagesh, who is the one who wrote the white paper. Yeah, we can. Absolutely. That's your call. Yeah, yeah. Yeah, absolutely. My role was to just to come and make you aware of it. I don't get paid by Mubashir for selling blockchain. Sorry, that was I mean in a lighter vein. ER as in disaster recovery. Mhm. Yeah. So in Dubai, they're working on what is called as a nano block, especially for all the IoT devices in a secured platform. That nano block will be, I mean, it is still not in the public domain. Since I happen to be in Dubai chatting with the government guys, they mentioned it to me in the context of my session over there. So they are coming up with a network wherein they don't want to give unauthorized access to a connected device in an ecosystem. Generally, these threats will come only, it's what you call, it's called as DDoS, denial of, yeah, distributed denial of service. It comes only through a connected device, right? So they want to deny access so that they can they can control that DDoS attack, and they're trying to build a secured ecosystem of connected devices. It's still in works. I am not too sure if something has already come into existence. Sure. Honestly, I don't have an idea. So maybe you can speak to your tech vendors, especially Microsoft and IBM. They're at least, I don't know about the India teams because India teams are still catching up and learning, but their global teams are very, very efficient in these regions. I mean, in these areas. Right. So that smart policy I was telling you about in terms of you have a connected watch, it'll beam all your biometric information, all the data in terms of how your heart is doing and all that stuff, and then based on that you can rewrite the insurance policies. Right. I have no idea. I have no idea. I don't know because people are coming up with interesting, very, very interesting applications. I have not come across that particular application. In fact, motor insurance also now people are thinking of your car premiums are defined by your driving habits because the cars are becoming connected and then they're beaming all the information. Based on that, your car insurance premium can be rewritten. Yeah, yeah, yeah. Mm. Right. So the hyperledger thing will be a good use case for you. That's correct. 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 Yeah, absolutely, absolutely. Today on Hyperledger, I think there are 130 global companies that have already signed up on Hyperledger. Private domain by IBM. IBM is promoting. Yeah, that is what I said. If you want to run an Instagram kind of an application, then you can't do it on a private cloud. You have to be on a public cloud. So in a similar fashion, exactly. So there have been attacks. They call it as the DDoS and all that stuff I was talking about. They use a protocol called Practical Byzantine Failure Tolerance, PBFT. So what it does is basically it is based on the Byzantine general problem. Byzantine general fought war in some 14th century, fully well knowing that there are rogue generals who are supporting enemy. But they still had to communicate with the rogue general. Without that, they couldn't pass on the message. They communicated with the rogue general and still won the army by using some probability theorems and all that stuff. They didn't lose the war, they won the war. Byzantine general problem is that, where they... So that exactly the same. I don't know if they've lost at least that particular thing, they won it. That's what they claim. So that is why they're using this practical Byzantine failure tolerance, wherein you know that, as he said, in terms of if there is an internal fraud, and you still know could be an internal fraud, still you want to come out successful. So some of it is they've used these kind of approaches. No, the video is recording it. Great. So I'm available on LinkedIn. I'm very active. So if you want to connect with me, connect with me. Sure. And then there's a blog I publish. Fortunately, I'm involved with blockchain in different parts of the world, and then I capture my experiences on the blog. I'm not that regular blogger because I have a day job to manage. So I do that, and then if you want to learn basics, then take a look at my TEDx video. Happy to say that it's crossed about 26,000 views till date, and then it's become kind of viral. I got somebody forwarded that video to me on WhatsApp saying it's a good video, take a look at it. So that was a moment of moment of truth for me. Thank you so much.